So you've heard about down payment and what that means for you. If you do a conventional, it's 3% minimum. And if you do a FHA, it's 3.5%. Now you can get a conventional as a first-time home buyer for 1% down if you qualify. So that's really cool. But now let's talk about closing costs. What does your realtor mean and your lender mean when they say you're going to need down payment and closing costs? Well, closing costs for a buyer are around 2.5%. They can go as high as 3% depending on your time of year that you purchase and what your tax liability will be on your property taxes. The closing costs we're talking about here are really things that are added up from your prepaids mainly and your lender costs. Prepaids are things like paying your homeowner's insurance in advance, which you have to do when you're a new home buyer. And you have to prepay your taxes. So if you get a tax credit from the seller for like 4 months because you haven't owned the home, but you're going to still owe those taxes, then that'll make your closing costs go down. That's why it's not a solid 3% and it's not a solid 2.5%. It depends on what time of year you close and what kind of tax credit you're going to get from your seller. Here in New Mexico, we pay our taxes in arrears. So if you close in October, you're going to be in the middle of the cycle because the cycle starts in July 1st. So that seller is going to need to give you a credit for July, August, September, and part of October. So you're going to get 3.5 months credit on your closing statement. When you buy a new home, your lender will give you an estimate sheet on what your closing costs will potentially be. Sometimes you can get a credit, concessions from the seller to help pay for some of your closing costs if the home's been sitting on the market a long time and if they like your offer. What surprises did you as a buyer have on your closing costs? Comments below.